All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for December 22nd, 2025. We are recording this at 4 p.m. Eastern Time, and this is episode number 507. My name is David Cosmeter, and I am the creator of TimingResearch.com. And with us today is Jim, the option professor, and he's going to be telling you about his top ideas for 2026. So I'm going to turn it over to the option professor.
Okay, thanks a lot, David, and good to be with you, everybody. This is Jim, Option Professor. Before we get started, of course, what I'll be sharing with you today is my opinion and my views on a variety of markets because I do follow them all. And I'm not going to be giving any advice out because that's not what we do. So I'm just sharing my ideas and my views. And you should check with your broker, your brokerage firm, to determine your own suitability on any type of options because options are not right for everybody. Um, if you have any questions as we go along, there's a chat box up there. So if you'd like to throw your questions in there, feel free. Okay, guys, I'm going to give you what I'm seeing here, what I have been seeing, and we'll take it from there. And I'll give you some ideas on what has happened and what I think might be happening very soon. Okay, so let's take a look at the S&P. As you can see, it's been a nice uptrend this year, but we had a big drop in April when we were going to have those big tariffs. And as you can see, markets were really going in the toilet there until they called those tariffs off, the big 200, 300% tariffs. So it's been rock and roll to the upside. As you can see, we had big drop in November, but that was the time to take your shot. And right there against my purple line is where I was trying to drop my call prices, meaning if I had strike prices higher than they were, you get rid of the high prices, you throw some money in, and you bring your call price down. And obviously, this has been that was a great move to do. But you'd have to have a belief system that the purple line wasn't going to get broken. And I did. And anyone who did obviously is very happy. You also recently got a little bit of a drop here to roll your strikes down, and you're benefiting from that right now. So as you can see, the RSI looks very good on it. And the question is like I say, will it accelerate to the upside? Well, right now you've got the RSI at 57. So that 60 number is always important to me. If you get that RSI through 60, it can go up to 70 or 80. And if it accelerates, so that's why this number here is very key as far as a big acceleration or a high point. So that's what the 60 number, 62, whatever number, that ballpark means to me. It's either on the verge of an acceleration or it's a high point. So as we go into the end of the year, we'll have to see. Some people were saying that in December, the average return is about 5%. Going back many, many years. So if we started out at 6,800, that would mean we'd end the year at 7,100 or so. And of course, that only has about 4.5 days to happen. So it'll be very interesting to see if it's turnaround Tuesday tomorrow, where the market goes back down, or if in fact it's a situation where we do accelerate into the end of the year. Now, what has made me be thinking that you should be bullish? Well, let me show you some things. One is the VIX. Okay. And the VIX, when it is under 20, is, in my view, moderate volatility. And moderate volatility brings money in from the sideline, and there's 8 trillion there. And it also brings money in from big money from family offices and also from institutional investors. So as you will see, if I put this up here, that the VIX has been very well behaved in the last 3 months, pretty much under 20 most of the time. Had a couple of spike ups in November, but can you see this? This is very well behaved, and this is very well under control, and that's why big money's coming into the market, in my view. Okay, but now it's very much on the bottom side. I mean, it's 14, almost getting ready to go into the 13s. It had a 5% or more drop today. I don't know the volume. It could be very light. But what I am telling you is this, is that that is not a VIX that's going to scare anybody. It's going to attract money because it's very quiet as far as the volatility is concerned. Now, let's see. Let's take a look if anything's changing here. Just down, down, down. I don't see anything changing. And as far as this guy here, I mean, that's just a total, evaporation. I'd call that an evaporation of the VIX. But what it does do and again, it's breaking to new lows. I mean, that low right there was 1485. So we're breaking to new lows here. So I don't know if that means there's going to be a big bomb on the upside or not, but certainly you're not going to be afraid of volatility when it's this low. Now, the bottom line is this low can also coincide with a high point in stocks. So while it's a good thing that it's very low and moderate, it's also getting a little bit on the low side, which means complacency is like huge. And positioning, especially on retail customers, that is extremely high. The other thing important is larger institutional people with the options. I was listening to a guy from Goldman Sachs saying that the put options are actually rising in value, which means the skew or people buying insurance is actually increasing here. So it looks like institutional, bigger money guys are kind of getting ready for a drop a little bit. And the retail guys are just going, get me in all the way in. In fact, fund managers have the lowest cash level in a very, very long time. So, I don't know how to really figure that out. Sideline money is high, but the money on the sideline for a fund manager is very, very low. The skew is indicating puts are actually being bought, yet the call buying, especially short-term calls, are running off the chart. So it's kind of a mixed bag, but it is a bullish situation as long as the VIX stays low. Here's the other thing that I was looking at and has been very helpful to me. It's called the percentage of stocks above the 200-day moving average. And why has that been helpful? Well, let's go take a look at the one-year graph. Do you think when the market's tanking, the amount of stocks under their 200-day average would be, continuing to go down? Excuse me, the amount of stocks over their 200-day moving average would be tanking, right? So prices are tanking as well. And since we hit that low in April, can you see the percentage of stocks above their 200-day average been growing and growing and growing? Now you had a big drop right there in November. That's why I thought it was bullish. That's why I thought it was time to buy it because again, the moving average was right there in that 65.50 neighborhood, and this thing was right on the gold line. So if this is the bottom of the stocks below their, excuse me, above their 200-day average at the bottom, it might be the bottom of stocks. And if 65.50 is going to hold that purple line, maybe that's the bottom of stocks. And when you get enough maybes like that, and the VIX was under 20, maybe that's the bottom of stocks, and that's where you take your shot. And that's why you can benefit from it up here. So it does look very good. And if it accelerates through here, I mean, let's take a look at the longer term graph. If it breaks above 65, I mean, this thing could start flying up here. And this looks like almost a what? A reverse head and shoulders. So if you start hearing 65, 70, 75 on the percentage of stocks above their 200-day average, I would be a big better that stocks are breaking out above 7,000. That's the way I see it. All right. So now you understand why I've been calling it as I am. And people who get the alerts, I've been explaining that to them each and every week on the weekly alerts. So it's not been bad information as far as that is concerned. And that can help you in many different ways if you get good information on where the trends are. And of course, the timing of when it might be good to take a bigger shot at something or be more aggressive in your bullishness. Okay, so this year, how did it go? We are up about 13% on the Dow. The small caps had their best year since 2020, up about 15%. We had the S&P up about 16%, about 20% on the NASDAQ. So obviously a very good year. And the S&P broke 37 closing high records. So, it's had a big year. Now, 2026 is coming, and the story might be a little bit different. Why is that? Simply because you have an election year. And during an election year, sometimes you have volatility and you also have a big correction. Now, if we have a rally, say we go up to the 7,000 area or even higher, and we were going to get a 10 or 15% correction in the first half of 2026, well, where would it come down to? Well, if you're up at 7,000 and you came down 10%, you'd be right around where my number is here, which is around 63.93. So, and then of course down here, this would be where I would think it might go down to, because you see, let me show you something that was helpful to me. When we had the big drop in April, do you see where this low was? It was around 48.35. Do you know where this high was? Right around 48.08. That's close enough for me. So sometimes high points, if they're broken, become support when they come back down. So this is why when it hit my line here And when it hit that high there, I thought it was a darn good, and these averages are pointing up. I thought it was a darn good shot that that was the low, and it was good time to be bullish this year. So now, like I say, if this thing were to come down from a 7,000 or a 7,200 or 7,500 area and was going to be a big correction for whatever reason, I think it could come down to these highs here, which is around 6,100. And that would be your 10 to 15% correction if we go into that 7,000 neighborhood. So I think that could happen. That's called a reversion to the mean. You see this thing here? Reversion to the mean. You see this thing up here? Reversion to the mean. So again, this reversion didn't last very long because obviously what made it revert to the mean was a policy that got thrown out the window. I mean, if you recall, he went into that China thing in Geneva, and Trump was talking about 80 and 100% tariffs, and he came out with a 10% tariff. That's a pretty big change from 100, right? So that's why this was what they call a bologna sandwich, but it was a bologna enough to revert to the mean and then right back on the bicycle because the whole policy's changed. And now the tax cuts are there, and they're taking less out of the tax and the depreciation and all the other stuff that's extremely stimulative. Checks going out to the military, checks going out to a whole bunch of things, right? Maybe we're going to get $2,000 checks in the mail too, so you don't know. But again, very stimulative. And of course, the rates, the Fed has cut the rates 3 times this year down to about 3.5%. And so basically, when you are easing money and credit, it's usually a good thing for stocks. So that's where I'm saying we could, if we have a sizable drop, come down here. And if you notice where my gold line is, right around that 6,100, 6,200 area, right? So if we got a substantial correction because of the election, because if things don't all work out well, because maybe the 10-year note, which doesn't seem to want to get underneath 4%, goes up towards 5%, just maybe all over the place. Maybe this gold, I mean, is telling us something. There is a clear distrust for paper currency. I was going to get into that in a minute, but I might as well get into it now because I started it, right? So let's start talking about the debasement trade. And debasement trade is where people do not trust the fiat currency anymore. Now, why wouldn't they trust fiat currency? Well, they might not trust it because they have a chart on the yen, and they can see that the yen, let's see if I can get something here up for you guys. Here it is. We'll go with the January yen, as good as any. You'll see that people are not really happy holding on to paper currency over in Japan, right? And if you want to go, that's the last year. And you go to the last 5 years, now you're really talking about cliff diving here, right? From way up here, way down there. So holding on to the yen's not been a big money maker, right? So that's one of the reasons that people are, and of course the US dollar hasn't been that great either. It has been, well, I don't know what happened there. Let's go back. DXY, the US dollar index, not another real strong one here in the last 5 years, up here at 116, and we're down here in the 90s. And you can see if it breaks under 96, which is what I've been telling people, we could really accelerate to the downside and it could get very messy for the dollar. So these are some of the risks going on, but this is what the debasement trade is all about. A guy made a joke on TV. He said anything with an atomic symbol on the periodic table is going through the roof. And then I just said to myself, you know what? That guy's kind of right, because I'm going to show you a couple of things right here. First one is the price of gold, as you all know, but we're not going to stop there. There's the price of gold. Oh, I got to put the right symbol in. Sorry about that, guys. The calendar is moving. Got to put 26 in on everything here. Whoa. GCG 26. There it is. Okay, let's get it up there so you can see. All right. So you can see the price of gold is going nuts, right? This is the last 5 years. I mean, the thing was at what, 1,800? Now it's at 4,500, making new highs. Okay, some people say 5,000, some people saying 10,000. And, it is going nuts, right? So Is it overbought? Well, on the longer term rate, this is where it is, and this is where the longer term trends are. So obviously, a reversion to the mean might happen at any point, but there's no evidence of it now because this is the 1 year graph, and I don't see anything pointing down. So the bottom line is you don't fight the tape. And in fact, what you do is you buy against support. You see all that stuff? That's where you're supposed to be loading up if you're bullish, because that's the trend line. At any rate, so there's you go there. But the guy that's really going nuts is the silver. And SIH, let's call it, for 26. And this will give you the silver prices. And you can see they're really going nuts because 5 year ago, these things were at $32, and now they've doubled up to $70 almost. So come on, I started in this thing a long time ago where it was definitely underneath $10 when I was working with it, and so this is quite the move. In fact, gold just hit the highest or had the best year since 1979. So that's about 45 years out. Pretty good. But again, this is part of everything on the metal side that's going nuts. What about high grade copper for March? You want to get an idea here? It had a big run, had a pullback here in August, and then it's been going nuts, and it looks like it wants to go further nuts. I guess in the London exchange, it's looking at like 12,000. So another one would be aluminum. I don't really know the symbol for that, but I'll hit it and see if it has any price for me. There it is. Let's see if the December aluminum. So as you can see, that one has gone on a big run as well. And then this is the one I've been focusing people's attention on because this guy here got some good news. And the good news, of course, I'm already in some of this stuff, so it doesn't, no news to me. But this news here is the platinum. And it's trading at I guess it's trading at a inverse thing because I'm going to put see, we're here at a 987. Now let's put the January up. So it might be backwardation, which is kind of bullish, means it's a shortage, or at least there's a bigger demand for immediate delivery. Yeah, that's a big inversion. So 2136 versus 1900. Come on. There's a squeeze going on here. And the squeeze is really coming from two areas. One is the Europe, from what I've read, has removed the ban on uh, internal combustion engines. And basically, catalytic converters are going to come back into fashion. And platinum, palladium, that was another one I didn't show you. Palladium's gone nuts as well. But the platinum is used as well as palladium and rhodium or something like that in the catalytic converters. So if they're going to be going back to a lot more production of those kind of vehicles, again, it would make sense. Maybe the demand would be there. The reason it went from where it was up this year, I noted in January when I was told that the Chinese jewelry industry was moving towards platinum. The lunar season or whatever it's called is going on over in China, and the wedding season is going on in India. So the demand's very good for this stuff. But why they're switching over is just imagine the price of gold jewelry over there. And, this stuff is 10 times rarer than gold, and it was always known as a higher quality metal from the standpoint of, value. But it did get, left behind by gold. But I have a feeling it's not going to be left behind anymore. And just to give you a couple of stocks, and again, I own these stocks, so I've been in there a while, but these are the ones that I have put in there looking for exposure to the platinum. And I will show you, the one is called Impala. And as you can see, I started getting into this thing at 6. You can see why, because you see it had bottomed out here and it was clearly turning up. So in this neighborhood here is where I thought the risk was extremely low. I'll even show you why it would even look lower here. So you see here, it's turning up. So this is where I thought it was just a very low risk thing. It don't have options, so you had to buy the stock. This is something I did mention to people. But you had to just pick it up at $6. Well, $6 is like buying an option anyway in some stick. And as you can see, it's off to the races pretty good. And the other guy, which I think I'm in there just a little bit different than this, is SBSW. And this is stock, obviously, again, this is when these things were turning. So it's hard to really start buying stuff that's made this kind of a move. But if platinum's going to do one of those deals where it catches up to gold at 4,000, Lord knows what some of these things could do. So again, you might do your own research, and you might do some research on some of these metals because again, the deficits are rising. The easy money is all over the place. They want to get Hassett in there to reduce interest rates, more easy money. We've got an election year coming up here, so they're going to really want to get their votes. And it's just a situation where, people are really saying to themselves that, you know, and then, of course, you have the aspect of, you know, de-dollarization. In other words, if you're in China, you're in Russia, you're in Turkey, or wherever you are that doesn't get along with the U.S. perfectly, you may not want to have a lot of assets sitting around in dollars that can either be frozen or, whatever. And so they're trying to obviously set up different means of exchange. One thing about gold, different than Bitcoin, which has a 16-year brand name. Gold has thousands and thousands a year of brand name. It also is pretty anonymous, where with the Bitcoin stuff, they're obviously doing a lot of documentation on it, and also the ease of movement. Again, for some people with central banks, right, and people who are large investors, they're still a liking to the gold and other metals. So, bottom line is that these things have done well for a reason, and the reason they've done well have not gone away, in my view. Now, if they go away, you got to change your tune. And is there a risk to them? You bet, because they are extended. But you know what? That would mean maybe you'd look for any kind of a pullback or something like that, because again, a lot of the mining shares, I mean, you could just look at GDX. They've just done great. I mean, they've just done great. But again, they are extended. And SLV, I think, is another guy there. And as you can see, these are extended. But, there's no secret here. I mean, I've been issuing a report all year, every week, talking about, Newmont Mining and Freeport-McMoRan and other Pan America Silver, PAAS. So this is no news to me or the readers of my newsletter. And there you go again. So that's where the action has been. There's a reason for it. The reason hasn't gone away. And, if we break 96 on the dollar index, you don't know exactly how these things, because you know what? These are not extremely, extremely thick markets, except for the gold, which is a $30 trillion market compared to like a $1.5 trillion Bitcoin market. But, some of these other markets like silver and other ones, are not, it doesn't take that much money to squeeze them. And that's what is going on right now in that. So that's the debasement trade. Keep an eye on it, because most of these things, are definitely getting a bid up for that reasons, or some of the reasons I just mentioned. Earnings. Earnings have been going very well, and they're expected to continue to do well. So again, that's why these high valuations are not as high as they were, because when you have higher earnings, the earnings are working their way into the price. Not on all stocks, but on some of them. And that means there's been some justification for the higher, what do you call it, for the higher valuations. So January 13th, we're going to start out, and you're going to start out with JP Morgan. And I would imagine JP Morgan's making money. And that's why JP Morgan looks like it's about ready to break out to the upside, possibly, because obviously it's building a nice trend there. And the RSI is in a point here at about what? Let's see where it is. It's at about 62. So, when it goes to 70 or 75, that's generally when things are spiking up. So keep an eye on that. Some of the other ones that I'm following myself is Bank of America. A little less sexy, but a steady riser, and it could benefit from refi action and other stuff. And you got Wells Fargo, another more domestic one, and that looks like it's trying to get going. It already has. Citigroup, of course, is another. And if you do want to take notes, I'll be mentioning some stocks that I'm kind of focused on, so that might help you. But again, this stuff, down here, I was very interested. Am I interested up here? Not so much because it's made its move. By the way, what I try to do with options alerts is I try to identify very low priced options, in my opinion, that could go way up in price. So if we're wrong, we lose the premium, which is relatively low. And if we're correct, do fairly well because the premium can expand dramatically if volatility expands dramatically. So that's what I'm trying to do. So you can't do that on things that already moved, right? Because the premiums are what? Big and the price is big. So that's not the game. Now, a couple of weeks ago, we had some of these, what do you call it? Regional stocks like this one. See how it's in here? Options are pretty cheap. Not so cheap anymore, doing what we hoped it would do, which is expand in premium. Another regional bank that's in the Russell Index. Again, when it was in here, very cheap, and now it's on the breakout. I don't know if it's going to continue or not, but certainly, it has room to move because all this area up here, who knows if things go the regional bank way. A lot of people are talking about revaluating the banks. Why is that? Because they're using the AI stuff to become more productive and more streamlined, also known as eliminating employees and being more profitable. So if they become tech stocks, their PE ratios go from the paltry amounts they're at to higher PE ratios, which can also translate into higher prices. So that's kind of the story on the financials, and that's why I'm taking a look at them. A couple of brokers that seem to be in there too would be interactive brokers. There you go. And that hasn't moved yet so much. So I'd keep an eye on that. There's decent value there. This thing was cheap last week, not so cheap this week. And this is called Charlie Schwab. And you see, you pull back there, the options are cheap. You take your shot. And if you're lucky, you get, boom, a nice rolly up. Okay. And what else was out there that I thought? Oh, yeah, Hood. Hood had a nice pullback. Pulled back here. Let's go in on the 1 year. Be easier to see. But it pulled back to the green line on the one, and it pulled right back to here. So if Hood can start breaking out, there could be something there. And if Bitcoin can get moving, that would be helpful too. Since I mentioned Bitcoin and it is kind of linked to the financials in some respects, let's take a look. Like I say, I'm roaming around because I follow all this stuff. It's a natural language to talk about all of it to me. Okay, so here you go. You've got, well, here's what I always use the 5 year graph, which is the weekly. It smooths out a lot. So you can see here, I thought it might bottom out somewhere here between 81 and 76. So far it bottomed out. It's held this. If it breaks this, it's not a good sign at all. But if it does hold this, that's about as worse as it could get. Now, to get going to the $200, 200,000 and 150 and all this stuff and break those highs, you got to get above 110, right? 106, 110. And again, that's when I would be thinking anything like there's going to be a huge move. It could happen fast, but right now, like I say, there's no evidence of it. But there is evidence that it has hit a low point of support because it's kind of stabilizing down here. Down here, of course, getting above the 90 area, 95 would be helpful. But again, can you see this 105, 110 area? It's just got to get through there. And if it does, and if it's going to 150, who cares if you miss 20 grand if it's going up 50 grand, right? But right now, the evidence has been much to the downside. Like I say, this point here at 95, I think is kind of important because then you'd have maybe a 1, 2, didn't take out the low, and then a 3, boom, and then you could get going. Keep an eye on it. Keep an eye on the Bitcoin. Um, so that's yeah. So some of the sectors that I've been looking at, there's the financials. I gave you a bunch of that. Talked about the metals, gave you a bunch of that. How about on the tech side? Well, like I told you, when things had a big drop, I thought they were of value. Quantum computing is one of them. So as you can see, let's get the right symbol up there, Jim. And I like D-Wave from the standpoint of they suppose QBTS, isn't it? QBTS. There it is. Supposedly they have the fastest computer. So, when it comes down here, I want to take a shot. Take a shot. Now I'm getting paid for the shot. I don't know if it's going to go back up and fill that gap here. I don't know if it's going to go make new highs, but I thought it was worth a shot down here. This is where the options are cheap. That's when I knock on the door and I go, hey, what are the calls going for? Another one I did the same thing with, but it's not really quite as good as this one. is Rigetti. But it's not the worst thing in the world either, but it's not running as much, but it's the same concept if it can get above here. Clearly, D-Wave is the big leader because again, I've heard that it has the fastest computers. So that's your thing on the quantum, something that we were very big on back in March when they were extremely cheap. Another one that might be worth a look on the crypto side is Galaxy. As you can see, we've got the double low down here against the gold line. Options are pretty cheap. I mean, is this thing going to come up here later next year? If it is, there's value here. So keep an eye on this one. And the guy who runs it, Novovitz or whatever his name is, he seems to know what he's doing in crypto. So maybe he's got something cooking there. Anything on the crypto? Oh, yeah, IREN was one that had a big drop, and then I thought it was a good value, so I thought it was a good deal. Again, it comes down here. I don't know. It's not really screaming out of this area, but it could be a situation where it could be just pulling back like it did to the green line, and then maybe it's back on the bicycle. It certainly was very good earlier in the year. From here to here is nothing to be ashamed of. And of course, that's a big pullback. So, if it still has a story, that's the time where it might be of reasonable value. Let's see. Oh, yeah, energy. A lot of people are really bad-mouthing energy, but I seem to keep liking some of these things because I think something big should happen. Now, it could go either way, but I mean, you can see it's in a wedge there. And it is holding the gold line pretty good, which is rising. So if this thing could break out above the 155 area, I was thinking that it might go up and fill this gap, and this gap up here is at 168, 170. So there is value here if it can get moving. But again, the 1 year still looks very sloppy. That's why I was saying get above 154, and then you might get something that really accelerates. So I thought that looked interesting, especially with everyone. The other thing is leisure. I had a subscriber call me and says, I'm in this Carnival cruise, Jim, and I'm really tired of it. I'm up there. I don't know what he had. Maybe he had to just use a number 30. He had a 33 call, no, 33 or 35 calls, but it's not till next year. I said, well, it's down here on this line here. Did you consider getting rid of the 35 call, putting a little extra cash in and coming down to 27 or 29? And then if it goes back up, your strike price is way down here versus way up in left field. And so I don't know what he did because, I don't give advice. He does whatever he wants. But I thought that move might have made some sense. And in this case, it made a lot of sense because you can see this thing is screaming now. And to be honest with you, sometimes I talk to people and I don't know every stock all the time. And this one I did myself because I thought it was a darn good time to take a shot. It's had a correction, it's holding support, the options are cheap. I mean, there are no guarantees. So, I like the odds. Don't forget, the guy who's selling the call is taking a risk too. And I thought the guy selling calls after a big drop, when it's gone sideways with low premium against the support, was not getting a good deal, which meant the buyer was getting a good deal. That's why I thought it made some sense. That's some ways the way I work my thinking process when I'm looking at this stuff. Um, let's see what else we got here. Uh, okay, yeah, this is one that I'm in my second batch, which means I've rolled up the position. And this is Alcoa. I thought it looked very good, down here. That's an uptrend, right? And once it got above gold, that means it's going pretty good. And, anything around here, I thought was a pretty good shot, 34 to 36, and it's really popped. So aluminum is on the run. And this is a stock that, again, it could have a lot more to go because look at this. I mean, there's a lot of area up here. You don't know where it's going. I don't know where it's going, but I mean, it has broken out. Definitely the horse is out of the barn, in my view. Um, Another one in the metals area, of course, is Freeport-McMoRan, the copper one that people like to take a look at, and that's another one that was here, cheap, 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 and then bam. So that's another metal one that I put on the report from time to time. And if you look at the 20-year graph, if it gets above this stuff, who knows where it's going? Because that's your all-time highs right there. Some people think buying higher highs is the way to go when you invest. You know, because you get more momentum. By the way, mergers and acquisitions, very big thing next year, possibly, particularly in the pharmaceuticals. These stocks in the pharmaceuticals are way down. So how do you get revenues to rise? If you have drugs coming off the patents, you need to possibly do mergers and acquisitions. And if you do mergers and acquisitions, you need to have a company that does that stuff, right? So I thought this company might have some value, and it looks like it's kicking in a little bit. This is called Blackstone. And there's another one out there called Carlyle Group. And this would be lumped into the financials. Again, on the report, I try to go over many things so you guys have a menu of things to look at, things that you wouldn't be looking at ordinarily unless you got the report. You get it? This is not just a hot idea list. It's also an overview of what's going on in the world and different stuff. And I'm kind of going over now how I do it every week, go through this stuff every week. China. How are you going to get exposed to China? Well, the way I try to do it is either FXI, which is clearly not doing that great now, but it did good earlier in the year. And also KWEB, which is a ETF on the what? On the internet stocks. But frankly, I kind of just go to two different companies that seem to, if they're going to do good in China, they seem to move a lot. And again, this KWEB is down near support now, so it's pretty cheap. But the two that seem to get going, if it's going anywhere, is Baidu, BIDU, and that looks like it could get going. If it can get above $130, I would imagine it's going to start accelerating to the upside. So you keep an eye on it. And then we look at Baba. And Alibaba is also right against support. And ergo, if it can hold that support and start breaking above 160, there's some real estate to go. And to give you an idea how far some of these could go, I mean, you can see there's plenty of real estate above. If you go back to a 20-year graph, if they go back that far, and it is a trend that has started already. So if somebody told me a year from now we were up in this neighborhood, it wouldn't shock me. I mean, the Xi and Trump seem to be getting along better. But anyway, if you want exposure, you want to take a risk, and you want to go in that direction, that's one way to go. And rare earth, we're going back and forth with them on rare earth, right? Well, rare earth, had a big move up on MP materials, right? And it went up to 105, pulled all the way back here to $50, so 50 cents on the dollar, and it is holding the line down here. So it is of some interest to me now because it has had a big correction, but it would be a lot more interesting to me when it closes above 65, because then all this stuff here would look like it was incorrect and that the trend here is controlling the action. So above 65, that would put into play all this stuff up here. So keep an eye on it. I think it should be on your radar because it is in the rare earth deal. And then on tech, some of them that were way up that went down, I thought might be worth taking a look at. This one here, Applied Digital, came all the way down here, bounced all the way up here, and then came back down. So down here, the options were quite cheap, and this has been a pretty reasonably good bounce that came off of it. Some of the other ones out there was a DocuSign, Digital Ocean. I always get goofed up because of symbol. And Digital Ocean, again, has been working pretty well against that trend line. So, of course, when it came down here, I thought there was value as well. And then there's some cheapies out there. Who doesn't like cheapies? SoundHound, is that near a low point or not? I don't know, but I know the options are not expensive like they were up here, so that's why they're on my radar. Keep an eye on SoundHound, and then you can also keep an eye on this guy here, because this guy seems to be trying to hold its lows and go up. And if you look at the 5-year graph, it's a beautiful looking chart there as long as it can hold here. So if it gets moving, there's a lot of area up here for it to move. And they've got a decent story to them. And then you've got these aviation companies that I always try to keep an eye on because they've had a good year and then pulled back. And this is your Archer. Again, it's not at 14 anymore. It went to half price. Do they have a business? Is it real? If they do, half price seems like a good deal. If it was a big scheme that will not work, then it's not a good deal. But again, when they go down is when I find some interest. Joe be the same way. Okay, so again, these are one, two that also, are on the cheaper side. That's what we are looking for. And then, of course, Novo Nordisk is very cheap, but it may remain that way if they don't get out of their own way. But you have to admit here that anything that used to be at 95 that goes to 45, which is half price, they may have some things down here, and RSI, seems to be trying to turn up a little bit here. So it's interesting, but this is like, catching the falling knife, not as falling as it was up here, but it certainly hasn't told you that the knife has totally stopped falling. But then the options are quite cheap. And sometimes when you do that, it works out. Like we were looking at Dollar General before their earnings. And you can see they were in a nice wedge with a rising blue line. So the bet was they were going to get good news and possibly break out. So the calls were pretty cheap. And obviously, when they broke out, the calls expanded significantly. So that's why we're doing these things, trying to look for what? Things that are, on the cheaper side as far as the options, and then seeing if we can get some volatility. Now, one thing you try to do if you're looking for volatility is you buy some time. So when they're cheap, you can go maybe out till the Februarys or Marches and be able to get a reasonable option, looking for something big to happen a little later in the year. Stuff like this may be on the verge later in the year to start taking off. This is a Marvell technology. This one here might be in the verge of taking off a little later in the year, and this is called Qualcomm. Maybe, maybe. But I'm trying to say is if you're going to take these positions of bullishness or bearishness, sometimes you need to get some time on the clock because things sometimes take time to occur. Um, and Yeah, this one here, if you go to a restaurant, when I'm out in Las Vegas, and I go to the restaurants or to places out there, everyone's using this thing. So it's obviously it's a point of sale deal, and I guess it does everything to organize you and efficiency. And so this baby used to be $50, and it dropped all the way down here into almost $30. And so it's an interesting deal because if the economy is going to grow at these great paces, and if the wealth effect is going to keep the buying going and the buying going, and people are going to spend, and when they go out, maybe there'll be more restaurants using their work, or maybe these guys will increase their costs. I don't know. But the bottom line is this is a place where I thought it might make some sense. And it's a very popular stock with people in the technology area because, again, it is being used at I see it all the time in the restaurants. So it's definitely a popular item. But it went on the defensive. Could have been for valuation purposes. Maybe they're doing good, but they're overpriced valuation wise. We'll have to see. Some of the other stuff that I just touched on was the international, right? And what I'm going to do here is show you that there are some international ones that look like you should keep an eye on them. And this is the one called emerging markets. So if it can get above this 55 area, they could have a good year next year if it can get above there. Some of the ones that already look like they're having a pretty good time of it, they're going to be redoing that treaty. The I think, what is it called? I don't know what it's called, the North American something or other treaty. And it seems like people are pretty optimistic about Canada and Mexico, because that's not a bad looking chart on Canada. And then on Mexico, that's not a bad looking chart on Mexico either. So keep an eye on those two guys because I think that we're redoing our thing. And then those banking stocks that I've talked about and I've had myself for a long time seem to also be getting a bid. This is European financials. And you can see, it's just been a pretty darn good ride here all the year. So I don't know if that's going to continue or not. Germany is the big country over there. And that one there is, starting to look a little bit better. There's room for it to grow. So there's some stuff going on internationally here that wouldn't be a bad thing to keep an eye on. The Japanese deal, their yen is tanking, but they are holding on to their support here. But again, if it breaks, boom. So I don't know if that weaker yen is going to help them like it used to, or if it's going to make people panic out of Japan. But right now, it's definitely holding on for dear life. So that's a couple of things to do as far as diversification is concerned. I don't just do options, as far as my own interests. So since I'm interested in everything, it doesn't cost extra money to share it with you. So I try to share it with you to see if you can get some value out of as much as I can share. That's basically what I'm trying to do here. Oh yeah, here's one for you. Boeing. I've been loving this thing since it broke down towards 100, 200. And here's why. They've got a backlog of orders that are huge. And I thought that, all this stuff down here was kind of baloney once it got back above the gold line. So this 200 number I thought was, a good place. Now it's running into some problems here, but you can see if it gets moving, you know, there is some potential that if it took this thing out, it could really have a pretty darn good year. Don't forget, there's only two companies really make these planes, Airbus and them. Airbus just got some pretty bad ink too. And also these guys do defense and aerospace for defense. And, sounds to me like we're going to get involved internationally. So there could be some demand for that stuff as well. But their backlog of planes is really ridiculous. If you could look at a 20-year graph, because I've been around for that long, I remember it when it was $400. So you get the idea. This is why I look at different time zones. If this baby starts getting above 240, 250, do you understand? And it has great news. And look how it's held the lows. So, this is where I'm interested when the stuff's on sale. If it doesn't work, I lose a small premium. If it works, it's ring the bell. And so this is something that's on my radar to have a very big 2026. So we'll have to see if I'm right or wrong, but this is the time where the ticket to get into the movie is pretty reasonable, particularly if there's going to be big volatility. If you guys had any stocks you wanted me to go over, this would be a great time to do that. And while you are figuring out what stocks you might want to show me, I'll show you a few more of the ones that I like. How about Roku? Not bad. You see all the room it has to go if it wants to go. And then basically has a look on the 5-year. Well, it's not cheap right now, but it also, like I say, is it looks like it's trying to go someplace. But it's not, it's not cheap right now, no doubt about that. As far as, it's already made a move. Let's see here. Marvel. Couple of more Bitcoin deals. Because if Bitcoin is bottomed, if it's bottomed at 75 or 80 grand, wherever that low was, ballpark neighborhood, and it starts breaking above 95 and 100 and starts going to those crazy numbers they're talking about, these things could get dragged back up. So you can see a double low there. That's interesting to me. And let's just see with that divergence or not. We got the RSI around 27, and we got it at 33. Bit of a divergence. So that means to me that the selling might be drying up a bit, so there could be an opportunity there. And the other guy was Riot. And Riot again come down here twice to hold the stuff, and it just came down from 24. So, 24 to 13, it's obvious on sale. And will it be on sale if Bitcoin goes to 150 grand? Probably not. And so this would be where you might take a shot at it and take a look at it. Do you have any strategy in buying calls, or are you simply any strategy in buying options? No. Again, I'm familiar with all the different strategies. I've been doing this for decades. Didn't give you my background, but I learned options at the Options Institute in Chicago, and I traded options for decades and decades. And I also did seminars throughout the nation and Canada for decades. So the bottom line is, this is not something. This is not my first day on the job. I'm familiar with and I'm knowledgeable with all different strategies. But because part of my asset allocation, you're talking about stocks you own, you're talking about income investments, and then you have speculative capital. And, what I try to do with some of my speculative capital is to put it into low priced options that could grow a lot, so that if I'm wrong, I only lose the premium. And if I'm correct, as you can see from the volatility, there is substantial potential. So, no, I'm familiar with all the different strategies, and in a moment I'll explain how people get started with me. But the people who um, want to learn more, my deal includes coaching. So if you're trading options now and you come to me and you go, Jim, I'm doing short-term trading, I'm doing swing trading, I'm doing option trading with multi-leg strategies. I can kind of walk you through this stuff and give you my opinion on how I would possibly manage these things a little bit, as far as, how much time would I give things, and basically, how do I switch the strike prices around? Like I mentioned during the November drop, that allowed people to drop their strike prices down if they believed that those lows would be temporary, which I did. That's an adjustment that people either do or do not make. And if they make it at the right time, it's very, very rewarding. If they don't, they're adding good money to a bad position. But if they have a reason for doing it, that's called managing the risk of the position. Um, and so basically, like I say, I do strangle positions sometimes when I think things are in a range and they're going to bust. Uh, on the report, I'll mention strangles all the time, which, if they don't go anywhere, you lose on both sides. If it looks like it's going straight up and you just want to do the call first and do the put later, that's certainly fine. These are personal decisions that people make. So, I have ideas, but they're not perfect ideas. So people have their own ideas and you know, they work their own ideas. Also, what people do is they subscribe to other services and they bring their other services ideas to me and they ask my view. And through my process, how do they look? And some people have been very happy that they could have adjusted their strike price a little bit and got a better deal, or extended their time for not much more money. Or maybe they saw on the charts that we looked at that it looked like a terrible idea and they avoided it. So that's the beautiful thing about coaching, is there's no limits on what we can talk about. And so you can bring other stuff from other people to me, or you can show me stuff you're doing, or you can ask me things that I think look keen at that point in time. So, the coaching thing is a very, very big asset of what I do. Yeah, a gentleman was asking about Mara, and that is another one in the crypto space. I'm just, the other one that I have been connected with is Hut. And that one is I think that's one of the Cadillacs in the crypto area. Obviously, like I tell you, if it's up at 60 and it pulls back to 35 and it's holding the line, that's not a bad time to take a bite if you're bullish. I mean, there's a lot of stocks that give you opportunity. I mean, people think Oracle's the great company of all time. The darn thing just went from 360 down to here. So, if you're bullish on it, you think it's so great, you just had a nice opportunity not too far from this line to take a look at it. Um, and then, of course, Tesla. I mean, everybody loves Tesla when it's up, but I mean, you got to love Tesla when it's down. You see here? And this was in March of this year. Where's everybody at $200? They love it up here. They hate it down here. And we just had a whole bunch of consolidation at $300. We're on the alerts. We talked about longer term options at 300 and 350. And now the darn thing's up here. So the bottom line is all of these guys give you an opportunity at some point. Meta just gave you a nice opportunity underneath $600. An opportunity here in April, underneath 550. Now if he starts getting back above 650, 700, you don't know where it's going. But the bottom line is that even the great ones, seem to give you an opportunity. Um, you know, uh, okay, AL, let me get this thing because we are going to be running out of time. So let me give you this. Time flies when you're going through the entire world market, right? Okay. Um, this is ALKT. Alkami. Okay, I get there's another one, ALCH. I do. Anyway, Jim, I've been finding, I just feel there's no move unless it reverts to 50. I'm confused with the bid-ask spread. It's like I see a pattern, but there's stuff and it doesn't add up. What do you think? Well, I'll tell you what I think. Let's start with the 20-year. and it tells me that we're down near the lows and the RSI is hanging around the 40 number. What does that mean to me? If you're hanging around the 40 number and it's not going to break way into the 30s, that means there's going to be no acceleration to the downside, and it may mean you're looking at the lows. That's what it means to me, in my opinion. So that's a good thing if you want to be bullish. What's a bad thing is it's under these averages. So once and if it were to get above, now he says revert to 50. Where's he getting 50 from? This thing hasn't, well, 50 is way up here. I think I'm on the right stock. ALKT, right? Yeah. All right. Well, anyway, what I see here is a potential divergence and a thing that's hanging 40. So it's possible it's near a low. I need some evidence that is turning up. So there's none right now. How about on the 1 year? A little bit of evidence as long as it keeps staying above 22. The longer it stays above 22, the better. Okay. And now if we go to the 1 month graph, it definitely looks like it's made a turn, and you definitely want to stay above 22. So 22 is your magic number as far as I'm concerned, to keep staying above that so these averages can start turning up. Because once the averages turn up, you're going to find the upside might be a lot easier to come by. So your big critical area here is 22. And then as far as resistance is concerned, if you can get back above the purple here, which comes in at 28, I think you'd be in a reasonable condition to say that this area here might start getting filled, particularly if it was coming with good news as well. All right, guys, it's at the time now. We can talk more, but I have to tell you, how to get it started with me, because that would be remiss if I didn't, right? So let me show you some of the stuff um, that we've got. Again, we have three things going for you when you start with me. First thing is you get an options master class. Me and Daniel Sinig over at Traders in Trading Indicators put together a 6-hour, 3-session course on what? On how options work, how the different trading works, and you start with the beginners, then intermediate, and then advanced. So that's a full-on education. It's a $397 value, and we give it to every subscriber for free. Second thing you get is ideas. Not all the ideas will be good, but there's been a lot that have been good, and here's some of them. On 9/14, on the alert, we had an idea on Teradyne to buy the 125 call on the 110 put for $285. Before it expired December 19th, which will be last Friday, the stock hit 190. 190 minus 125 is $65 in the money. So the intrinsic value on the call was $6,500 all the way from 285. Now, this is not an isolated incident, nor is it something that happens on every idea, but there's been plenty this year, as you'll see: 267, 1,500, 240, 2,200, 292, 2,700. What this means is you had plenty of time between the idea and expiration to make a little money on this, because the intrinsic jumped all the way up to 6,500 before it expired. And notice all the different companies: DigitalOcean, Applied Digital, Google, Rigetti, Marvell, Baidu, Cloudflare. What's in common? They all had inexpensive options at the time they went on the alert. Roblox, remember that one? That had a big run. Blackstone again, Taiwan Semi, there's Seagate. What about Datadog? It had a big run. So did Boeing, AbbVie. Again, you're also Robinhood at 60. Okay, so you're notified of companies you're not watching that maybe you'd want to watch, right? And therefore, it might be of good value to you. And some of them are as cheap as what? $199 or less. Open Door, $85. Riot, 196. So again, how do you get started on? And we do have longer term options as well. And don't forget, it comes with coaching. So to get started on this, you can click. I think there'll be a link on there for you. If not, I can send you this link. All you got to do is text me. But here, you've got the way to get set up is you put your name and all that in there, and then you either hit quarterly, and there's a $100 discount during the season here. So rather than 297, it's only, excuse me, 397, it's only 297. And then on the annual, rather than 997, it goes down to 897. So you get a whole year of information. You get coaching, you get the course, and you get ideas. That's an awful lot for your money. And I think there's a lot of value here. In fact, I know there's a lot of value. So I feel very good about what we deliver. Particularly, there's people charging a ton more than this, and I don't think they're giving up nearly as much information. So I suggest you get started. We're going to have plenty of ideas next year. A good investment, I think. Again, the yearly rate there. I mean, come on, 897. You have significant money at risk. This is not a bad way to invest some money in education. And then as soon as you click complete purchase, two things happen. One, you get your receipt, and two, you'll get your course sent to you right away. So you get your course right away, you get your receipt, and you'll get my phone number that you can text me and set up your appointment for coaching or any questions you might have. Now, I'll give you my text number now. So if you have any questions or you'd like to get started and you don't have the link, I can send the link over to you. The phone number is 725 254 6423. Again, 725 254 6423, or simply email optionprofessor@gmail.com. optionprofessor@gmail.com. All right, I got to sign off now, guys. I really would like to hear from you. I'd like you to get started, and I'd certainly like to help you do as best as you can with your decision making next year, and try to help you with some good, solid information. Have a happy holiday, guys. Let's get in touch. Let's get started. And again, good luck and good trading. Have a great night, everybody. Thanks for coming.